So that is me up 4% in total in my new funded evaluation. Here I am just documenting from the start to the finish to how I'm scaling my funded accounts, and this one's going to be added to my others. The last video I made 2%. My average returns, and it's not massive clickbait, 10 to 20% per trade, not sustainable. I target a small but consistent 2 to 3 R per trade. Fair enough, there is the occasions where I get 5 to 6% per trade, but that is usually just for my very, very refined reversal models. But in this video, I am just going to break down exactly my thought process into taking this trade, how I got my higher time frame bias, and how I journal my trades. But before we get into all of that, my name is Derek Bathgate, and I am a currency trader slash forex trader, and I have been for about 3 to 4 years now. It's been an extremely long journey to get to where I am right now. I have refined my strategy down to an absolute T. I have journaled over 400 trades, way over 400, throughout my full time studying currency trading, whether it's been one strategy to another. This current strategy, I have done around 250 journaled trades, live back testing, and have combined and found out what actually works for me, made my trading strategy personal to me. It's unlike something that you would see online. Yes, there's parts of like SMC, ICT, there's things that I've also found out with trading. It only comes with back testing, live trading, journaling, refining down from with what went wrong in the trades, what went right. The biggest part to my trading, what really developed this strategy, was learning from my losses. I know it sounds that easy, but when I first started, I never journaled for around a year, 2 years of my actual trading. And one of the biggest turning points was solely just learning from my losses. Learning from my losses helped me grasp what was putting my trading in a bad position, what was working with my higher time frame analysis, what wasn't working. Same with entry models. I could refine them down to an absolute T to know what time I'm entering, where I'm exiting, what I'm targeting. It gets to a stage where it's all mechanical. All you need to do is press a button and that is you. You're in a trade. If it hits stop loss, fair enough. If it hits your TP, brilliant. You know, if it hits break even, it doesn't matter because all of it is learning. I am extremely happy if I get a loss, because if I get a loss and find out later on that I didn't actually follow my plan, that helps me work on my things like psychology. It helps me dig into things that I need to work on, whether it's FOMO, whether it's rushing into trades. So yes, the biggest thing with my trading was learning from my own losses, and it is really that simple, because I see a lot of new traders, all they do is they try to learn SMC, ICT, they get into trying to learn some sort of trading strategy, and then they think after they learn it, that's them, they understand trading fully, when that's exactly how I thought. When I first started, I was about 6 months in, I quit my job, I had a little bit of savings under my belt, but then after that, I told myself, yes, if I just stick to being disciplined within the charts and learn how to trade, then I will be a profitable trader within a few months. But the pressure that put on my head was unbearable. After that, I've went and got like 3 to 4 jobs. It's not sustainable to have that sort of mindset when you first get into trading, that you'll just take time off work, you'll quit your job and then fully go all in with trading. What you need to do is either work part-time, full-time, as long as it fits around your trading time. But you're not going to find that trading time if you don't journal, if you don't backtest, if you don't do all of that. You're not going to find your trading window. But if you do know your trading window, you can hopefully revolve your work around that, and that is what will help you become a better trader. But I'm going to jump into the trading view side of the video, show you my exact trade, higher time frame analysis, entry model, and how I journal it. I will see you there. We're just going to start on the H4 time frame to where we had a break of structure here, but as we don't really have much of a liquidity sweep, I was still considering this the initial high. So we take the high of the sweep, the buy side liquidity sweep, and we had the expansion down, which after that we can expect a return to the 50% level. If we don't return to the 50% level, that is completely fine. All we need to do is see buy side liquidity sweep, which occurred during London Open. So if we move down to the M15 time frame, there is nothing of interest for Asia session, as well as this is still our initial leg. as before we were just ranging inside the M15 leg. Everything within here, it's not structure, it's just fluff. So we need to wait until the high goes of the M15 leg to then create a further new M15 leg, which happened during London Open. We take the high of the previous M15 leg. So that creates our new leg, which we swept buy side liquidity. And this is the current leg's low. So once we break that new M15 low, we didn't really break, but I still market entered here because as it's a market entry, anything after this break, it's not confirmed. But you need to take that kind of risk for these sort of reversal trades on the M15. And I targeted 2R, which is the opposite side of the H4 swing structure, as you can see here. We gunned, and that was it. As easy as that. I did get a bad fill, however. I got entered around here, so I had to target a bit lower. And we were pipped off of taking TP, expanded back. I was break even at this point as we broke structure, swept liquidity, creating a further leg, and we were 20 pips in profit. So for my break even, I need to see 20 pips profit and a further break of structure, which did occur here. And as you can see, we had the pull back up. I was quite sceptical, thinking we were just going to move to break even, which I wasn't bothered about. It is what it is if we did end up moving to break even. And then we tapped for 2R. And yet here is the proof of my trade. So let me quickly break that down again. We broke structure here, but as there is no sweep there, this is still our high. We take the high to the low of the expansion. We wait for a 50% pullback, which didn't occur, but we still had our buy side liquidity sweep. Moved down to M15. We had the sweep, the break, and we had the market entry on the break to target 2R. So now if we jump over to the Notion part of the video, we can run down why I entered and how I logged my trades. So this day of the week that I entered was Friday. Pair Euro USD playbook. This would be an M15 reversal. Sell, stop loss, take our measuring tool from the start to the top, 18.7. For management, this was a market execution. Risk was off. This was internal to external. Internal of the H4 leg to external range liquidity. We then had a liquidity sweep, break of structure. Asia was swept, returned to ERL. So this really just logs all of our management stuff, our confluence as to why we entered the trade. So when we go back to refine my playbook at a later date, I can see why I entered, what made me win, what made me lose. Psychology, it was clarity. Time of execution, so this entered me solely on this wick, which was this break, so 0930. Time to risk off after we moved 20 pips into profit, okay, and after this break, so it would have been 1145, and then I enter my exact profit for that day. So, write a quick brief description. After you write your description, M5 time frame, copy, paste, M15, exact same, copy, paste. So this is just for visualization when you go back to go over your data. H4, and then we have our before and after screen. So that is exactly how I journal, and I definitely recommend that you do it yourself because it really helps refine your strategy at the end of the day.